Today I spoke with Gary Abela and we looked at how a holistic AI strategy should move into a growth strategy and be incorporated in all firms. Make sure you watch it until the end, where Gary talks about the AI bubble and what he thinks we'll be looking at in 5 years' time. Hi Gary, thank you very much for joining me on Foster Denovo Talks.
It's my absolute pleasure. Thank you for the invite.
No problem. So Gary, tell us about yourself, your background, where you've come from.
Where do I start? I started in asset management and working for a life company as well called The Hartford. 2003, so pre-RDR. Worked a patch, worked with advisors my entire career, jumped into asset management, and worked for a company called Legg Mason, which is now Franklin Templeton. Did advisory distribution for a while there before then leaving the sector entirely, moving to Berlin, and just taking a break from the industry. And then I fell into technology. So I ran a big technology festival in Berlin called Tech Open Air before starting my own AI agency, spinning out a few products. Recently had a product here in the UK called RealAway, which we sold to a Swiss entity. And then jumped around a little bit working with some of the fintechs in the UK market. And now I'm doing some consultancy. So that's a quick fire round of 25 years of running around.
Whistle stop for 25 years.
Tour.
That's
yeah,
what we just
exactly.
had. So why did you move into tech? I mean, why would you leave asset management? But why did you move into the tech side?
It's really interesting. I didn't actually have the intent to move into tech at all. When I was heading up UK distribution for Legg Mason, this was a time when robo-advice was all the rage. So about 10, 11 years ago, Bateman had come out and the big wigs in the US said, right, we really need to get into this space because it's captive distribution and asset managers need to have captive distribution. And so they'd asked me to go and do some recce with some different firms in the UK because for some apparent reason, they thought I knew about technology. And so I did that and I learned an incredible amount then. I thought robo-advice was going to be the thing 10 years ago. I mean, I couldn't have got it so wrong. But it got me really interested and really excited about what technology enablement can do to an industry, even back then. I think one of the reasons I left is that process, ironically, made me realize that big firms find it incredibly difficult to innovate. And so we were looking for an acquisition ultimately, and I'd done a lot of work in getting a couple of firms up to the table. Effectively, it stopped, and it stopped not because the decision was the wrong one. It was because actually there was too much personal risk at the higher up you went of an individual to make that call. And that was that realization to me at that point, which is innovation only happens one death at a time in certain firms when you've got a big hierarchy. And so I just sat there and thought, right, actually, I want to get into this space. And so I left the industry and moved to Berlin, which was a big tech ecosystem at the time, and wanted to understand how to get into tech. And that's why I got involved with this conference. Be honest with you, I went in as an intern thinking that I would just understand the database and then go and build my own thing. But then they asked me to run the business for a couple of years. And that was quite a life-changing moment.
So you ran a sort of digital LOA firm, is that right?
Yeah, that was my most recent product here in the UK.
And then you sold that firm?
Yeah, so it got acquired by AIDP, which is a Swiss entity, which takes document processing across different sectors now. Right.
Okay. And when we talk about sort of AI and tech and all that sort of stuff and wealth management, which is where you now consult in, we all get terribly excited about a note taker, don't we? And everyone goes, oh, we've got an AI strategy, we've got an AI tech stack, all these sorts of things. It's like, you've got a note taker. So what do you think about that then? Does it irritate you slightly?
I mean, look, it was a gateway use case 2 years ago. When I was out here 3 years ago trying to sell AI into the UK advice space, I was very much having conversations with this AI thing's not going to stick. It's not really something we should be thinking through. And that was only 3 years ago. So The great thing about note takers is it found a use case that put you in front with the advisor because it helped the advisor directly. And I think advisors generally are a little bit resistant to technology by virtue of the fact that actually they don't tend to use it much. It tends to be the support structure around them that does. And so I think it caught the hearts and minds of the advisors because it made them more effective. And so from that basis, I think it's been a game changer. The reality is we're 2.5 years on from that now, and it's effectively a utility. And so where are the next use cases? Are we actually doing something that's going to help improve better outcomes for the clients rather than just simple time efficiencies? And I don't think we're there yet.
Yeah, I think that's really important because we talk about, and we've got, obviously you've worked with Helen, but we've got various AI that we use in our firm. But we talk about, it's great, it's saving so much time. What's the benefit realization that we can get from it? But are we measuring the right metrics when we look at these things?
That's really interesting. So I'm doubling down on that because it does bug me a little bit.
Okay.
We have a lot of people talking about time savings, and I think time savings are great. It's a KPI, it's something you can get your hands around, but does it translate into bottom line P&L for you? I think the good firms that I've seen think about adoption and rollout of these types of technologies actually understand what are we doing with the time that we're saving, and is it going to be accretive to either generating more revenue or, and think about what it's a KPI around that. And I think that's the starting point. But it goes back to my sort of philosophy that, yes, you want to have KPIs based on each individual technology, but actually it should be forming part of your growth strategy and the KPIs for your business, and then you can connect it and feed that through. I think that's a more sustainable way of thinking about it, because it means that you actually build in longevity into a long-term rollout plan rather than a quick win that you then want to actually just communicate to the market, to your investors. And that, I think, feeds the hype cycle. And I think we need to do a better job as an industry of bedding it into actually core basic principles of how we run our companies in any case. So it shouldn't need new KPIs is my point.
Yeah, no, I totally agree. And I think it's interesting you say that, the hype cycle, like it's all we talk about at the moment, isn't it? If you're not talking about AI, in your firm, then where are you, right? And I think it's really interesting, and I like it. You say, it's a growth strategy, right? Because a lot of people go, we've got an AI strategy. But what you're saying is it's not an AI strategy. It should be a growth strategy which incorporates AI. So talk me through that a bit more.
Yeah, it's interesting. Look, I think it's evolved over the last couple of years. I think initially people were thinking about AI because it was such a hot topic, and they were trying to push a technology into a business rather than understanding the business and the broken workflows and the pain points that you have, and then go and find the technology enablement to drive that. That's the way technology has always been. It's been a part of your strategy to run your business. I think the difference now with AI is that actually it's not a cost center, it's a growth strategy. And that's what I find so fascinating with it, because for the first time, we've got a change in the way in which our operating models can work via the use of technology. And so I think firms that build a growth strategy and then understand where is the pain points in my business and then go out and source it. And it doesn't have to be AI. It may not be AI. That, I think, is the right way of thinking about a longer term strategy.
Yeah, I think you're right. There needs to be a commercial growth strategy behind everything that you're doing. If you just go and try and implement, and loads of people have done it, I'm sure we've done it as well, where you just implement a bolt-on bit of technology, like lots of people are doing. And that's exactly what the note taker was, wasn't it? Well, we'll tack this onto what we've already got. Well, how does it incorporate? How does it actually work? How does it form part of that longer term strategy? Do you know what I mean?
But that being said, that's not necessarily a bad thing also. So I've always been an advocate of the fact that go and try. If you're not trying, you're not learning and you're not doing. And so the bolt-on strategy initially was fine because it just got us moving.
Yeah.
But I think now the important part is, okay, we've learned some lessons. We understand, the art of the possible. And so with that, bring that back internally and then figure out what's right for your business, because every business is also quite unique. Every journey is going to be different. And so just simply sitting there thinking you can do a carbon copy of a general strategy just doesn't work. What works for your business, what's right for now and what's right for the next 2 years from here, and then start to build that through. So I think testing and validating and not really overthinking it is great, because that removes inertia, and inertia is what kills technology at the end of the day. And the great thing about the wealth management sector is that we've jumped on it with two hands, and that's been fantastic to see. But now it's about what's phase two. How do we make sure that actually this is sustainable and it actually improves bottom lines, and more importantly, improves customer outcomes? I don't think we're there yet in thinking about consumer duty and how is technology going to improve customer outcomes. And that for me is where I think we need to get to.
Yeah, and I think you're right. I think we are quite a way off that. A lot of firms that think about, implementing these sorts of strategies, they think, right, okay, how do I go about this? I need to get all my processes completely aligned. Everything needs to be wonderful. And anyone that's worked in wealth management knows that is not the case. So they're like, right, I need to get everything perfect before I implement. Is that right?
I see that a lot. And that's that inertia. I think that's mainly fear. Nothing's perfect. Processes don't actually exist half the time than you think they do, particularly in the consolidation world where you've grown so quickly and every firm has their own operating model. And so It's a bit like saying, I'm not going to go to the gym until I get a little bit fitter. It's the wrong way round.
Oh, sorry, what's wrong with that?
Well, you just need to go and start,
Yeah, no, I
right?
agree,
And that's
agree.
the point. And so the process of starting enables you to then figure out what your processes are. So the rolling out an AI use case actually unearths things in your business that you didn't even realize were happening. And so that's a great thing about running through these use cases. But you do have to, I think, take stock 6 months in and say, what have we learned? What do we need to do differently? And how do we now change that going forward? Take an agile approach to your strategy, particularly with AI, because the technology is moving so rapidly. I mean, even more rapidly than I expected it to be. And I've been doing AI for the last 11 years now. But, we've really seen a step change in what it's unlocking in businesses today. And so you have to be iterative, like you build software development. You have to be agile. There's no such thing as a waterfall kind of strategy that sits there in perpetuity. So that's the advice I'd give to people is do something, but then do something with intention once you've understood the basics of what it can do. Because the worst thing about strategy is when you're doing it blind, based on just a hope and a dream of what you think it can deliver for you, because the delta between your expectations and then the reality are going to be so far apart that that's going to be really hard to unwind. If I give you a really classic example here, I see lots of CEOs or C-level execs talking about an AI strategy and at the same time then talking about freezing headcount, or dare I even say it, reducing headcount in the next 12 months. I think that's preposterous. I think one, there's a whole bunch of different problems with that around the efficacy of what are you using AI for, number one. But two, that's putting an expectation on something that you haven't even validated is going to work yet. And so for me, that's a very risky strategy and actually not good stewardship of your strategy for the long term.
Yeah. No, I agree. And you do hear it happening. You think, oh my goodness, we're going to bring this in. It's going to save us 40%. So therefore, we're going to lose this headcount. We're going to do this or whatever. And I agree with you. So if you were looking at a firm and they were saying to you, right, okay, you're consulting with them, right, what do we do first? Like what's step number one?
Step number one is at least having some broad education around what it is and how it can work. Because I think too often people want bite-sized information. Lots of people at C-level don't want to get into detail, and I can appreciate why. But with something that's so profound, I think having an awareness of not just what it can do, but also what it can't do, and that's probably even more important than what it can do, I think then sets a good foundation for you to think about how do we think about our business. Then from that point on, start to actually bring in mid-level management to think about different functions in your organization and look at those processes that you have. Where are the breakages? Where are the things that actually cost money and also annoy your staff for having to do? Because this should be an enablement of your existing human resource capital. This should be about how do we get more out of what we have so that we can scale without adding incremental headcount. I think if we can get to that point and get to that point sustainably, that's a great phase one. Phase two then is something different in my view.
Before we get back to the episode, let me share something that I think can genuinely help you. At Foster Denovo, we work with individuals, families and business owners who want real clarity around their financial future. Not just investments in isolation, but a structured plan that brings everything together. Your goals, your wealth, and your next chapter. We take the time to understand what matters most to you, build a clear strategy around it, and support you as life and circumstances change. If you're ready for financial planning that's thoughtful, personal, and built for the long term, we'd love to have that conversation. You can find out more about Foster Denovo in the show notes. Now back to the episode. And you mentioned earlier, actually, I thought it was interesting, AI moves so fast. Right. And so you've got a strategy and 6 months down the line, surely it's already changed. It's moved forward. So how do you work at that pace while still trying to stick to what you set out as a commercial strategy for, let's say, 3 years? Because are you not just constantly chasing your tail then?
Sure, but that goes back to what we started with the conversation is that if your strategy is based on growth and based on your business fundamentals, then the technology is just an enablement to that strategy. So that becomes a problem when you think your strategy is the tech, because then, of course, the tech is changing. And so by virtue, your strategy. And so if you're honest about your growth strategy, then that's actually irrelevant. I also think there is a lag between what's happening in the tech space. So look, agentic agents, Claude Cowork, absolute step change in the last 2 weeks. The reality of that hitting organizations in everyday, business is very, very different. And so there is always going to be a lag from what's out there to what ends up becoming something that you can use in a regulated space within an enterprise grade type of organization. So I don't get too concerned about how fast it's moving. It's more around understanding the signaling of where it's going. And I think if you can get a grasp of that, the direction of travel, then it means that you can build strategies that are at least thinking 12 months forward. So agentic AI has absolutely become a thing this year that people need to start thinking about.
Yeah.
And, a note taker is one thing. Agentic workflows is a completely other, kettle of fish. But figuring out what you can do with that means that the base use cases you have today will work with the existing technology that you can leverage, but you can then supercharge that with the next round and keep going and make it an evolution. And it should be an evolution rather than a one-stop shop.
No, that makes sense. But I think it's helpful to hear as well, because I think people panic about it, don't they? It's moving so fast. Can we keep up and all that sort of stuff? I suppose one of the most interesting things about AI is people, isn't it? And, it's going to take my job.
Yeah.
Right. This is the thing. So, a firm brings in, they say, right, we've got an AI strategy, we've got a growth strategy, et cetera, et cetera. People panic if they don't know what it means. And I think people are getting better at it. But how do you get past that? How do you get past that resistance and fear and everything else that comes with it?
I think there's lots of different ways you could do it. I've seen some really appalling
great. Tell us
outcomes
all.
in the market, and I've seen some better ones. Look, I don't think there's a silver bullet of how to do it. I think it's very dependent on the culture that you have within your firm.
Yeah.
But it goes back to that strategy piece and goes back to, in my view at least, the reasons why you want to do technology, you want to bring AI into the business. I think if you can be authentic in the sense that actually this is about accretive value, it's about empowering my humans that I employ to do the work, then from that point on, you're starting from a good place. What I've seen is that you get that message from the C-level about a POC or a pilot that they're running through, but then in the second week, they're also then talking about reduction in headcount. Those two messages don't tally. And the reality is that people will look through that and that fear will come through. And so it could end up becoming a really negative outcome for your culture if you don't do it right. And I don't think people put enough emphasis on the change management element of technology. Technology is never the problem in adoption. I think McKinsey quote, 70% of it is actually down to human and change management. And so I think get the change management done correctly, educate and empower your employees to want to actually understand what that technology is going to do for their day-to-day. And then what happens is you get a lovely natural word of mouth. A paraplanner talking to another paraplanner about, how much time he or her have saved on a suitability generation letter through a tool is far better than a CEO saying, you have to adopt and you have to use.
Yeah.
That's what actually then will form that sustainable change and be part of your culture as a result.
Yeah. So, and I was going to say this, so top down, bottom up, what's the best approach to it?
I think
of both?
A bit of both. You always have to do a bit of both. And I think there's also different layers within top down. And so most of the time when people think top down, they actually think middle management up.
Yeah.
And I would argue from my own experience, if you think about what we were doing at ReLOA, we were taking pension scheme policy documentation and scraping that information and putting it into a spreadsheet. Nothing too sexy about that. And that ultimately was really a entry-level position task. And the reality is that the head of customer service or the head of the admin team was all for it, but the actual underlying people that needed to physically use the software resisted it, not because they didn't see it as a benefit to them, but because they thought it was going to take their jobs. And so you've got to get down to really grassroots and do the work on that foundational level, and then everything is much easier. Adoption, for me, is what kills technology. And so putting more emphasis on how we have people adopt this for the right reasons, I think is an important point to kind of keep driving through in your strategy.
Yeah, I think it's about sustainable adoption, isn't it? Basically, that we keep it going, and I think creating a safe space for your workforce so that they understand it's not taking your job. This is what's going to happen. Actually, and we've had this in our teams as well. It's about you can do more, and you can do more of the stuff that you enjoy as opposed to the stuff that you hate doing and you moan about because it's sort of really dull work. So I think that's sort of the way that we've approached. But I'd like to talk to you off camera about the ways that you've seen it done appallingly. In fact, I think that would be very interesting.
I mean, look, I think also I always go down to this basis that we've got a lot of humans doing very robotic work, and we need to get the robotics, the AI to do that work and let the humans do what only humans can do, which is actually cognitive thought, compassion, understanding a customer, thinking about actually the things that you don't have written down in a data point and the things that actually are going to make you have a proposition that's human. And that for me it's actually AI is there to make us more human if we can think about it in that way.
Yeah, no, I completely agree. And I love it. I champion it. That's why I'm talking to you. It's interesting though. We are, wealth management in particular, completely regulated. It's highly regulated. So at what point do we have concern about AI being in our regulated industry? When does it become dangerous? Because people worry about that.
Yeah, and rightfully so. And I think, look, we have a very relaxed regulator currently in relation to AI, which I think is good.
Sorry, who are you working with?
No, so the regulator actually isn't trying to get into the way. They've got lots of programs out there they want people to adopt and use. And I think the reality set is the risk today isn't really too high because we've got note takers. And once we move into actual advice and true, let's use a model to be able to generate actually what the advice should be, then that's where the risk lies. Because the reality, and I think this is some of the concerns I have, is that, and I don't want to get too technical with this, but the reality is a lot of people are using large language models as a core piece of their AI strategy. Now, they are generative and they basically take text, understand it, and then regurgitate it into text. They're not deterministic. And that's one of the challenges in this regulated space where you need to have evidence of why you've made a decision. And ultimately, a lot of the decisions that we make don't need AI. They're actually more deterministic decision trees. And if you build that as a basis and then use the LLMs on top to make it more personal and to kind of remove some of the friction in those use cases, the marriage of those two is where I think the beauty lies. And currently, everyone uses their AI strategy and they just basically think large language model. And I think that's incorrect. And I think in a regulated space, you'll see the bigger banks don't do it that way. The bigger banks have been using AI for the past 15, 20 years. And actually, it's more predictive models, lots of data labeling. It's lots of understanding what is specific to us as a firm, what's our core USP in the way in which we do advice. And then from that, let's build using these other tools around it, a proposition that means the entire workflow works. And so at the end of the day, most advice firms are going straight to application and vendor rather than sitting there thinking about, what do we need to build as a core infrastructure first that then these, satellite vendors can actually come and feed from.
So with that in mind then, and everyone is sort of losing their minds a bit about it, aren't they? We're all very excited about AI and wealth at the moment. How do we stop any sort of over-reliance on the tools that we're using them? Because that can create problems as well, can't it?
No, absolutely. And look, my own personal experience, I use AI on a daily basis and I get to a point now where I stop checking. And so that human in the loop is obviously the first thing that people talk about. Human in the loop is great. It gets you past the RFP stage and gets you past compliance because they're like, right, actually, our processes haven't changed because we still have that stopgap. The reality, though, is eventually the humans stop checking. And I think you need to bake that in already and let's be realistic about what happens. And so with that, I think if I give you a good example, note taker, every 6 months, do a spot check of human written notes versus the AI generated notes and see where the delta is and see whether actually you're getting a better outcome. Bake that in now because that's the reality. We get lazier because we trust it. And the problems with a lot of these AIs is that they're not necessarily as repeatable as you'd like to think they're going to be. In advice, you can have the same client, 2 different advisors, and you'll get 2 very different outcomes. It's
100%.
subjective by its nature. And so by virtue of that, we need to be very honest about how we're using AI within our workflows and sense check that actually we're using it for the right things and we're not just outsourcing the problem to something that we then have the liability for.
That's really interesting because I don't think anyone's doing that, are they? Like we haven't built in that sort of 6 monthly check or anything like that. But it's a little bit of, in a weird way, role creep that happens with different things. So, okay, interesting. And you've talked about data a fair bit now.
Yeah.
Now I'm never one, as my teams will know, to talk about data, right? But let's talk about it. So you sort of said it's data, not process. That's the important thing. What do you mean by that?
Look, I think data is misunderstood a lot in our industry. And I think when I speak to firms, particularly in the advice space, and they think about the data that they have, when you actually look through it, it's pretty shocking how behind we are in relation to data.
Yeah.
We're talking basics, the number of clients we have, the AUM we have. This isn't data. These business metrics should be known. And I'm amazed by how difficult it is for firms to actually reconcile these numbers, because actually what in reality people have is a whole bunch of spreadsheets that they download from different disparate systems, and they stick it all together in a master spreadsheet. And if they're clever enough, they've got a BI tool that gives them some management reporting. That for me isn't data. I think people that think about the longevity of their AI strategy or their growth strategy should be thinking about data in a way, particularly if you're a consolidator. This is my multiplier. This is actually my, part of my valuation that's going to mean that we are going to be above the rest in relation to, our core asset. So data for me can go down granular level in understanding, what do my clients invest in? What are they like? Let's think about the low level piece, because then once you have that, you can then actually do an incredible amount with it. And organizing and structuring data, for me, if you want to then feed an AI or an agent, the better context you can give that, the better outcome that you're going to give. And at the end of the day, the vendors don't have this data to train on. It's the clients that have it. And so good large clients are starting to think about data warehousing, starting to think about, right, this is my core asset. Now, I don't necessarily know what I want to do with that data, but I know I need to start to have it. And I think put the effort in now, because then that's going to actually pay dividend for you wherever the technology goes. Because whatever you do, good quality labeled data is going to give you a better quality outcome. Garbage in, garbage out. And that stays true, irrespective of where the technology evolves to.
No, I know. I've heard this a lot, and we are doing so much. And I know you've spoken with Helen. We're doing so much with our data at the moment, and even at the what we're looking at now is phenomenal compared to exactly as you said. The spreadsheet upon the spreadsheet, you've got a CRM over here that's feeding something else over here, etc., and it's all sort of pulling together. So we're definitely in that space right now. But lots of firms sort of go, we're data enabled. Are they? What are they doing? Are they data enabled or not? I see a smirk coming off.
I do see a smirk. As I said again, a lot of people view data in their own different ways, right? Majority of firms aren't data enabled. I think we've spent the last 20 years saying data's the new gold, and it never really has been.
Sorry, who's been saying that?
Well, sorry, data is the new oil, I think was the
Okay, there we go. That's fine
France.
then, yeah.
We're moving to cloud, and all, big organizations were thinking you want to be a data-driven enterprise. In wealth, we're not really a data-driven enterprise. And I see this particularly when you've got consolidators acquiring businesses. And think about how you value a business that comes in. It tends to be the AUM, the number of clients. And even then, you're not actually 100% certain whether that's correct or not. And you've probably bought a business that when you then go look through the data, because you don't do a data screen at the beginning of that process, you realize actually that it's not quite what you bought. I sit there and think, in this day and age where you can take unstructured documents and information and give it structure, why couldn't you do a full check of every case file and actually run that through an analysis of understanding what's the quality of the business that's been written, and use that as a metric by which you value a firm, not just simply the number of clients and the size of AUM. Because the quality of the business and the quality of the relationships is actually what's going to stand you in good stead as a consolidator, not just the AUM number.
100%. And we've acquired firms and been through due diligence and all that sort of stuff. And I'm sure every compliance person here is hating you for saying, just, get unstructured data and put it into structured data and case file everything. But do you think then having good AI and having good data will change the acquisition sort of outline and market?
100%. Absolutely. I think we're not there yet because the solutions don't effectively, they're not focusing on that part. Look, one of the problems around compliance generally in AI, and I think it's an incredible space for AI use cases because it's very structured. If you think about, how somebody does a case file review, there's certain processes that you need to go through. Is the right documentation there? Do we have the right information in documentation? There's so much back, forward and checking and wastage of time. When actually, if you say, right, actually, we've automatically checked that through the whole process. And then the compliance officer actually knows I need to focus on these 20% because that's actually where the the domain experience and needs to come in. And you always need that domain experience because a lot of these systems, unfortunately, don't bake that domain knowledge into a system because we don't have the data that proves it. You know, you can have, most of the time, somebody give you a good case file. They'll say, train your model to understand that's what good looks like. We don't have data that says, why did you say that looks good? If you think about it, that's that domain knowledge that we're missing in a lot of these models. It's why it's really hard. Suitability letter generation using AI isn't scaling as much as we thought it would. It's a very difficult problem to solve because it's so subjective. The same is true then of case files, but I think case files are less subjective. There's a lot more structured. You need to evidence this, and then ultimately the outcome will be, is it a good, amber, or bad case that needs to be rewritten?
Yeah. So are you seeing it now? And you mentioned something earlier, which I thought was fascinating, that, acquirers and PE, houses, etc., are looking at firms to be AI enabled and have tech and have all of that sort of stuff before they're bought?
Well, so I think it's interesting. I was speaking to a consolidator yesterday that are on the hunt for a new PE owner. And the brokers in the community are effectively saying 30% of your pitch needs to be about your AI enablement strategy.
Wow.
And so that for me is quite profound in the reasons why this is not a fad and why it's structurally important for the business. The valuation multiple you get because you're AI enabled in this market, I think is the reason why we will continue to see people wanting to do more. The risk with this, however, is that you're doing slideware and just talking about it to keep the investors happy or to get a higher valuation and not actually thinking about, are the metrics coming through our bottom line to prove that it's actually working? And so I think the firms that will win will actually not just do it for the hype, but do it because actually they want to build good, credible, strong revenues in their business and see how the AI is going to give them that. Then I think they'll actually be there'll be a better valued business because of the fact that actually they've done it correctly.
Well, it would have to be, and it's pulling together everything you've said, isn't it? It's the growth strategy, which involves an AI strategy, which involves the data being clean and processed in the right way, and then also making sure that at the end of it, the metrics are right, and we're looking at, are we growing our revenue? Are we growing our client bank? All of those sorts of things, pull it all together, and then that's what I think firms are looking for.
Yeah, and let's not forget the people part of that as well,
Oh God, I did forget that, sorry.
Because I think the sum of all of those parts, I think, is ultimately then how it will work through.
Yeah. So, big question for you, Gary. Sorry to put you on the spot. But you said the fad, and we've talked about the hype and all that sort of stuff. So everyone's saying it's an AI bubble, right? And everyone's likening it to the .com bubble and all that sort of stuff. And what happens when it crashes? And, I've been told in no uncertain terms by most people that of course it will crash. And I was like, oh, right, okay. What does that look like?
Yeah, well, look, I agree. Bubbles don't burst, they deflate. And with every technological revolution, you always have this. A hype cycle goes up, it gets a little bit too crazy. Look at what happened 2 weeks ago, in fact. You had a firm in the US called Altruist. They're a Silicon Valley-based tax firm. They don't even do financial advice, it's tax planning. They launched a product. All of a sudden, you had the whole wealth market share price plummet in a single
drop,
day.
Didn't it?
And so completely overhyped, completely, wasn't valid. However, what it did show is that the market's actually already pricing in the fact that actually AI is going to impact advice and wealth. And so that hype cycle is, I think, very much here. What will happen is once actually we realize it's hard to adopt, it's hard to bring into the organization and get that bottom line growth, you'll start to see it deflate. But that actually will then weed out the tools that are out there that are not actually providing value. And then you start again on a better foundation. And so for me, that's healthy. I don't see it as a problem. I just rather we get through it quickly so we can get onto the other side.
Yeah. And final question, and this really is the final question. What do you think we will be looking at in 5 years' time that if we saw it now, we go, oh my God, you've lost your mind? What do you think 5 years' time from now looks like from an AI perspective and how firms are?
It's really hard to tell because it is moving so quickly. I would like to believe, and this is, I'd like to believe that we're going to be giving more advice to more humans as a result of AI. So as you think about the core principles, that advice gap is ultimately going to hopefully be narrowed as a result of being more effective. But down to the personal human level, I believe that everybody will be working with AI and not even realizing they're working with AI. And that fundamentally will showcase that it's been embedded and it's working. Because if you think you're using a technology, then actually it's still quite nascent in its evolution.
Yeah.
If you don't even realize you're using technology, then it's embedded in the way that we work. And that for me is where I think we'll get to.
Amazing. Thank you so much, Gary.
You're welcome. It's a pleasure.
There you go.